7:30 p.m. only on Bloomberg Quint.
Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is a show which gets you a complete wrap of all the stocks that are buzzing in trade. I am Darshan Mehta. Let's welcome our guests on the show. Joining us today are independent investment advisor Sharmila, Joshi and Vivek, Mavani, and Sangeet, Lakkar of Newberry will be joining us shortly. He's a little delayed at this point of time. But on the show today, we'll first discuss Reliance Industries' fourth quarter performance. What's the view ahead? How did the individual segments perform for Reliance, and what's the way ahead? CRISIL also reported a weak set of numbers this time around. While their rating business did well, it was the research business that actually gave way for CRISIL this time. The recent listing, Polycab India, it was a very strong listing for the wires and cable company. We asked analysts whether the current valuations are now suitable to make an investment for a long term. And last we asked our analyst friends one sector in which they would recommend buying a basket of stocks so that there is the risk is equally divided. But one sector that they are bullish on, and a couple of stocks in that sector which they should slowly steadily start accumulating. So that's the view that we are talking about. But let's start with Reliance Industries. Came out with a number which was in line with what the market was anticipating. The counter, obviously ahead of the numbers, had run up significantly. It's down 2%. GRMs at multi-quarter low, profit at multi-quarter low, and Jio did well for itself. So after 17 quarters, the profit dropped for the first time. But what's the way ahead for Reliance? Are valuations compelling enough to hold on, or should they exit? That's the view we're asking our guest. So Vivek, I'll start with you. What did you make of Reliance, and what's your outlook for someone who probably wants to make an investment in Reliance?
Well, a couple of things about the Reliance numbers. Yes, of course, as you mentioned, that in spite of multi-year or 17-quarter low gross refining margins, I mean, they still delivered double-digit, 10% earnings growth, largely driven by petrochemical business, where profits grew 52% on 22% volume growth. So petrochemicals remains not only a second growth engine. I mean, it's been a growth engine for the last 25 years, but also a serious cash cow business, because much of the capital expenditure in terms of expansion has happened over the last 5 years, and now it's harvesting time for petrochemicals for the next few years. Jio, the telecom business, the Jio also has, as you mentioned, a very sharp expansion of margins driven by increase in ARPUs as well as very strong subscriber additions. So what really, my sense about market being excited about it in the last 1 year is that the character of Reliance is seriously changing, and it's already changed to a substantial extent, that from an energy, oil and gas conglomerate, today almost 35% of EBIT or profits come from non-energy, which is retail and telecom, and they are consumer-facing businesses. And the expansion in margins in retail as well as in the telecom business, probably in a couple of years down the line, it's going to be 50-50 or more than 50% coming from the consumer-facing businesses. So Reliance no more remains an energy conglomerate, but will be more looked at hopefully as a consumer play. Now, a couple of things in terms of concerns that I find slightly uncomfortable about that. Notwithstanding the huge growth numbers that we see in Reliance, the return on capital still is at a measly 7-8%, return on equity or just at about 10-11%, and now one could sense that a lot of the telecom investments are front-ended and which will probably deliver profits later. But I was looking at some consensus, or I was looking at a wide range of research reports over the weekend. There doesn't seem to be anybody projecting or estimating return on equity, return on capital to move beyond 12% even in the next 3 to 4 years, which is slightly disturbing. That is going to be growth without much of capital efficiency or operating leverage really playing out that one would expect. That's number one. And number two, the cash flows and the debt. The debt again at about 3 times EBITDA or at just less than 1 time, maybe about 0.6, 0.7 on a net debt equity seem reasonable. But as it's growing, I mean, the debt doesn't seem to be falling. I mean, at least that is something that the number that I would expect in the next 2-3 years, the debt to be in absolute numbers falling. So the key monitorable going forward for me no more remains the GRMs and ARPUs and subscriber additions, but conversion of EBITDA or cash profits in EBITDA or cash profits, whichever, into cash flows. I mean, is it resulting in free cash flows? Otherwise, I see Reliance to be range bound from here. Maybe it will be a market driver, so I may only participate because of the momentum, but doesn't really build a very strong conviction on these levels.
Okay, that's the view that's coming in on Reliance. So what about you, Sharmila? What did you make of the numbers?
Yes, so I think obviously what you saw and which is sort of reflecting in the price today is that probably their old businesses that we knew them, the historical businesses, whether it is the oil and gas as well as the petchem, they were sort of in line, but nothing very exciting happening there, and I think that was sort of anticipated by the market. But I think what the market didn't like much probably was the fact that you didn't get very good subscription growth this last month in the telecom business, and ARPUs there were actually lower than what market was anticipating, and the profit was flat. So, you know, the whole excitement in Reliance over these past couple of years has been the new businesses that they've gotten into with both retail and telecom. And market sort of persisted, sort of saw that Jio was a bit of a miss where that is concerned. So while market is sort of confident that they will get to that 40 lakh crore subscribers that they're talking of, what they aim at by the end of this year, you do see costs going up because now they'll have to pay since, you know, the demerger for the tower business has happened. So there is going to be a bit of a hit over there, and that could sort of put further pressure on ARPUs because they're not increasing costs there, because they're clearly still in that expansion mode and they want to hit that subscriber number. I think the big positive surprise was in the retail business, where you saw very healthy growth and really good profitability, etc. And I think going ahead again, you know, there's a lot of news-based stuff happening in Reliance over just before the results with that whole Hamleys and that Aramco news playing out. So that was the excitement, and I think going forward, what I think would be the excitement would be if they were to really spin off telecom into a separate company, because that could sort of, you know, further add value to the stock. So I think it's a stock that should be bought on declines, in short, because, you know, the excitement is there because of the retail and the telecom, and that's what you have to play it for going forward, but you have to allow the stock to correct a little, because I think it had gone up too much.
You think that going ahead, Reliance will be more focused on retail and Jio rather than the traditional oil and gas business where they're trying to sell stake?
No, it's not that. I think they could sell stake there. It's just that these are the businesses which are sort of, you know, as Vivek was also saying, which are more customer facing. So these are the businesses that will sort of add that beta, you know, because it just gives you a more, like if for instance they do acquire a Hamleys. So, you know, if you acquire a global company like that and it's a Reliance-owned company going ahead, you know, that immediately sort of gives you that kind of visibility which markets would like. Or if Jio would really, they could really hit that 40 lakh crore subscriber number, that would definitely be something that market would give a thumbs up to. And Jio has been actually what has provided the sort of, you know, the positive element to the Reliance numbers over the last couple of years. So, you know, going forward, maybe, you know, that could continue to sort of add excitement to the stock price. Okay,
Sangeet, we're just talking about Reliance numbers. This is the first stock we're talking about. What did you make of the numbers? If someone wants to, you know, take a bet at this point of time, valuations compelling enough, or, you know, because seeing growth, or would you wait for a decline to enter Reliance, or what's the sense that you have?
So I think in terms of numbers, the traditional businesses were in line, and the new age businesses, the consumer and the digital businesses were beat, I guess. But I believe the valuations right now factor in all the positive news. So for taking any new positions, I have wait for a decline.
Okay, but what did you make of the business going ahead? How do you see Reliance over the next year? You see them, you know, going slow on the oil and gas business because they're looking to sell stake, and would they focus more on the new age business, as you put it?
I think that's very clear, and that's been outlined also time and again, that the traditional businesses, I think at some point of time they will look to divest, or they will look to cut down stake. And the new age businesses, whether it's retail or whether it's Jio, is that what they want to ramp up. However, execution is the key, and I mean the most important thing for me to watch out is the capital allocation policy of the group.
Okay, that's the view that's coming in on Reliance. I think the buy on decline seems to be somehow the consensus view that's coming in on Reliance. The stock is down almost 2% after the numbers that came out after the company came out with numbers which met analyst estimates. The second stock that we want to talk about is basically CRISIL. Now, CRISIL came out with results. And the numbers were weak. It did manage to correct significantly post the numbers that came out, and even despite that, if you see the two major businesses, the rating business continues to do well, while the drop was on account of the research business that didn't do well. Profit was down 6%. Sharmila, what should one do with CRISIL? Do you have a sense of CRISIL and the scene of rating agencies in India?
So I think, first to just talk about the numbers, I think there's, from what you can make out is that the numbers were also lower because they reported that foreign exchange loss as compared to a profit the previous quarter. So I think, that is one thing. And the other thing is where the business itself is concerned, I really have a little bit of a mixed view, simply because, it is becoming increasingly sort of very important, or, it's going to be a factor that people are increasingly going to track to see what kind of rating a paper gets. And there is enough business in that sense, whether it is the kind of corporate bond issuances that you're seeing, or securitization, etc. But the problem is that we've seen a lot of hits in this last year where credit rating agencies seem to have gotten it completely wrong, because we've seen papers fail where there was no sign of any concern. So it is sort of become compulsory for you to get that rating, so they will continue to get business. So from that point, it's okay. But, in terms of really whether I want to invest in such a company, maybe not.
Okay, what about you, Sangeet? What's your sense of CRISIL and the scenario of rating agencies?
I think I second Sharmila's view. I'm a little neutral to negative as well. But it's a very operating leverage kind of a business. I mean, if you see, even if the current quarter results, if you see, the rating business showed the top line showed a move of about 12%, but the bottom line was up by 45%. And whereas the research business shown a decline of 10%, and the bottom line was down by 25%. So we'll have to see when the credit cycle and followed with the market sentiments improve, and that's where you will see a very robust growth in earnings for a company like CRISIL. The valuation right now is factoring in that growth, but I think we are still some time away from that cycle to play out.
What's your view on the sector as such? Because there are CRISIL, there's CARE, there'll be a couple of other agencies. I think these are the two ones that dominate among the listed space.
So again, it's a very cyclical industry, and I would always go with the sector leader if I have to play this sector as such. But I think there's still some time away for this sector to play out.
Okay, Vivek, I know you don't track this, you don't have a view, but anything you wanted to add on this business as such?
Well, not really, in the sense that what I like about the credit rating business is one of the things that Sangeet mentioned was of the operating leverage. The second thing is it's a terrific free cash flow kind of business, because they hardly have an asset. They hardly have assets. It's like a software business with operating leverage also built in, where for certain volume and certain number of people, the kicker on earnings relative to revenue growth could be just disproportionate. And it's a very high return on capital, return on equity business. But there are a few things that I'm not comfortable about, and which is a bias which I'm not able to get over, notwithstanding the positives of the business. The rating agencies always seem to be behind the curve in terms of estimating problems coming our way, and sometimes when it's so intuitively obvious that every person on the street knows it, but rating agencies are just too late to react to it, and that is what I'm not comfortable about, and hence I don't track the sector as well.
Okay, so that's the view that's coming in on CRISIL. I think again, concerns still remain in terms of the numbers, in terms of what happens, and it's a cyclical industry as of now. The next stock that we want to talk about is Polycab. Recently listed, had a bumper opening. Let's see what the counter is doing. It's actually flat in today's trade, but is it worth investing in Polycab? Did the big jump in stock price in opening factor in the valuations fully? Sangeet, I'll start with you only. Polycab, what's the sense that you have?
I like this stock, mildly positive. I would wait for a decline to add. But in terms of business, very interesting business. I think 90% of the revenue comes from the wires and cables, where they are also the market leader. The only thing I'm wary about is their FMEG business, which the market fancies, but I mean, it's a very difficult business to get into with the likes of Crompton, Havells and the other big guns already there. To create a space in that business is going to be a challenge. But the traditional business is fine. I think it's trading at about 20 times, kind of similar to the other players, whether KEI Wires or Finolex or etc. So positive, and I would suggest to accumulate at this price also.
Valuation wise, you are happy with it? It did have a bumper listing, so does valuation look stretched at this point of time?
So it trades at 20 times, always better to add on declines. But I think over a longer period of time with growth coming in, because I mean the last 3-4 years they have been showing a robust growth. So with that continuing, I think the valuation will ease up over the period.
Do you like the sector? Anything else in the sector that you like at this point of time?
Not particularly in cables and wires, but I like Astral Poly, which is into pipes. So not exact comparable, but I think that's what I would like.
Okay, Vivek, what did you make of the Polycab listing now that it's listed and people have an opportunity to invest? Would you recommend anyone to start investing for the long term in Polycab?
Oh, certainly. I mean, take a 4-5 year view or even longer term view. One can actually take a 10-year view on a stock like this. Certainly, it's a stock to accumulate on declines. A couple of things. Of course, as the largest cables and wires company and an emerging fast-moving electrical goods company. So even when we say emerging, it's already got 600 crores of top line and margin estimated at about 3% for March 19. I mean, the results are yet to be out, but that's what seem to suggest. Now, in the next 3 years, driven by distribution expansion and expansion of product portfolio, this consumer electrical business can double in size. So what we are talking of is about 1100-1200 crores of top line, which is not small, by the way. By then it will be bigger than an Orient, or it will be probably bigger than some of the other big names that we have them listed. And margins moving from 3% to about 6-7% range. Longer term, over a 5-6 year period, this could be possibly a 2000 crore business with a margin profile of about 8 to 10%, which is in line with what the other larger competitors, whether we are talking of a Crompton or a Havells, are doing. So from very meager profits in the consumer electrical business, this could be one earnings growth engine, not necessarily a top line growth engine, because from a total in terms of more than 6,000 crores, probably this incrementally in percentage terms may not look very large, but from earnings point of view, certainly it's a serious growth driver. From just the traditional cables and wires business, it can possibly kind of compounded growth in terms of both top line and earnings. It's a reasonably mature business for Polycab, so not much of margin movement. They're present in all segments, so it's not even the revenue mix can give them any margin kicker, but about 10-11% margins being maintained and about maybe 12 to 15% growth on a realistic basis. Pessimistic could be 10 to 12% growth, which could go on for the next 4 to 5 years. Now all this combined with so what are we seeing 3 to 4 years or 5 years down the line? A balance sheet which is going to be debt free. It's going to be probably debt free only in about 12 to 18 months. Increasing return on capital, better working capital efficiency, and hence you'll have better return on capital and return on equity. And on a forward basis, I mean, it's trading at about 15 times earnings for the current year. That is the financial year 20. Could be about 12-13 times on a 21 basis, which I don't think is very demanding valuation. Fairly reasonable valuation for a double-digit earnings story over the next 4-5 years.
Okay, and Sharmila, what's your sense of Polycab?
Yes, I think as both of them have said, their business wire and cables, they're obviously the market leader there, and the kind of market share that they enjoy. And they've been talking ever since, I mean, this whole, all their interviews, they've really stressed on that whole FMEG, fast-moving electrical goods part of their business and how they intend to grow it. So I think those are the definite positives, and they do look like they can grow that business decently. But where I'm coming from is also the fact that the current valuation, if you're buying it at this price, is not leaving too much on the table for you, the price that you're buying it at. That's number one, immediately. Number two, I think now this is debatable how much importance you want to give this, but the grey market premium for their stock was about 9,500, and there are rupees. So that brings you to the sort of price they're trading at just now. And there are a lot of people who just invest in a stock for those flipping gains. So there could be pressure on the stock for the near term, because there would be those people exiting the stock, in short, because they'll have made their money. So there could be people who've got their allotment could be looking to exit. So I think if you have to buy the stock, just be a little patient and try and buy it on declines.
Okay, so that's the view that's coming in on Polycab India, the company that got recently listed on the stock markets. And the final stock is basically, we want to talk about a sector. Which sector are our guests betting on? So we're not talking individual stocks. We talk about a bunch of stocks in that sector that can be accumulated, probably on declines, because there is fundamental reasons for growth in this sector that will probably come in. Sharmila, I'll start with you only. One sector that you feel that someone should bet on for this financial year, and a bunch of stocks in this, they could take a little bit of exposure.
So first of all, I'm very honestly, I feel I'm not very comfortable really recommending a sector at this point in time, simply because my overall sense is that the election outcome around May, leading up to the election and the election outcome could give us a sort of a opportunity to buy at lower prices. The kind of volatility there is, the
yeah, so it's
and
one
also
sector you
the
can
sectors
accumulate.
could change.
Yeah.
Depending on the outcome, the sectors that I could like could change going forward, because then I think you will get that sort of a sense of how policy is going to proceed, and maybe something like an EPC or a cement or some infrastructure could look more interesting, simply because they're at beaten down prices and the capex cycle could revive. So at this point in time, I like IT.
Okay.
To sort of cut the debate short, I like
Probably
IT.
it won't have any impact of elections as such.
And the two big companies that have, or the 2-3 companies that have declared their results so far seem to show that order wins, etc. There is no real big concern on that front. And my bet is with the large cap IT. So I would stick with large cap IT, HCL Tech, Tech Mahindra, and you could throw in a bit of a mix and buy slightly smaller companies like a Persistent System or a Tata Elxsi, where I believe numbers will be fairly good this quarter.
And you won't bet on the larger ones, Infi and TCS at this point?
No, I think not. I think there you need to again allow them to correct a little.
Okay, Vivek, what's the sense? Which sector are you betting on for FY19?
Well, irrespective of the election outcome, since Sharmila mentioned, I'm neutral on the election. My sense is elections don't really have an impact, barring few days around the result time or maybe few days after the results with the government formation and the ministerial portfolios. That's about it. But irrespective of the election outcome, I'm positive on PSU banks, and along with the PSU bank, I'll also add ICICI. So that's the basket that I'm betting on for the current financial year, driven by 3 things which probably have been discussed again, but at the cost of repetition, I'll still say that. Recoveries driving earnings, improving the capital adequacy also for the banks, because some of the PSU banks are also constrained on lending because they didn't have enough capital, and so a lot of those loss-making banks could come back to profitability. That's number 1. Number 2, at least for the current financial year, current calendar year, whatever, at least a near term, we certainly are in a declining interest rate scenario. RBI has already indicated in the last 2 or 3 monetary policy meets in terms of the direction. They've cut rates twice in 2019 itself. That also will give the PSU banks, which are heavy on the treasury portfolio of government securities and other bonds, a shot in the arm in terms of profitability. Whether it's paper profits, so be it, doesn't matter. So along with that, what we'll have is declining provisioning requirements, which weighed heavily on the PSU banks, including ICICI. So what I'm saying for PSU banks also apply for ICICI, so which probably will ease off over the next few quarters. From a valuation point of view, SBI is trading at about 1.2 times price to book, and ICICI at about 1.5, 1.6, both on consolidated basis. If we look at a Bank of Baroda post this merger with Dena Bank and Vijaya Bank, but it's probably just about 1 time price to book. Now, all of these don't seem very demanding valuations. Given the kind of growth in earnings and book value that we will see in the next 2 years. So my sense is PSU banks should outperform, or should be the new growth trigger for the market to take it to the next higher level.
Okay, and what about you, Sangeet? Which sector are you looking at for FY19?
So I'm betting on telecom as a sector.
Okay.
I think it's one of the most hated sector. It has been one of the most hated sector for last couple of years. And I think now with the fully consolidated market, the ARPUs I believe are at the bottom of the cycle. Once the ARPU improves from here, I think there will be a considerable re-rating. And we have also, the thesis is also seconded by the recent rights issues of both the telecom majors, which is Vodafone Idea and Bharti, wherein a significant chunk of the rights is committed by the promoters themselves. So the promoters are bringing close to 20,000 crores into the company. That also gives me a lot of comfort. And with a 120 crore population, just 3-player market, and with a product and a demand like this, I think it's a no-brainer for me.
Okay, so what's the pecking order in telecom?
I would go with Bharti Airtel first, then followed by Vodafone Idea.
Okay, and you believe that what did you make of Jio's numbers and compare it to telecom? You believe that ARPUs have now hit rock bottom and now they will start, and the telecom war is over now, and all of them will start benefiting?
So I would assume so. I think the price wars as such apparently seems to be over. Though we are yet to see the uptick in the ARPU, I think post-elections we could see a round of that. And once we start seeing even the slightest hint of the ARPUs going up, then you will have a linear trend, coming 3-4 years. And I don't see a fourth player coming into this market for next 10 years. So this would remain a 3-player market for a foreseeable future. And globally also, if you see nowhere have you seen ARPUs like what we have seen in India. So there's only one direction where the earnings should go up from here.
Okay, so that's the view that's coming in. The 3 sectors that are spoken about include telecom, IT, as well as PSU Bank. So that's been spoken about. But with that, we're completely timed out on this edition of Hot Money. Many thanks to all of my guests for coming in. Sangeet, thank you so much for coming in. Vivek, Sharmila, thank you for coming in. Ask BQ comes up next. Stay tuned to Bloomberg.